Welcome back, everyone, to the Noob Selling Options channel. I am absolutely pumped to dive into today's explainer because, well, we're looking at a pretty pivotal moment here. We are dissecting a massive portfolio transformation. We're talking about shifting completely away from passive asset accumulation and aggressively building what we're calling the AI fortress. And if you've been following us for a while, you know we value total transparency on this channel. So we're not just going to sit here and talk theory today. No, we are looking at the raw receipts. We're looking at the exact numbers. And honestly, more importantly, we're going to break down the profound psychological shift that's absolutely required if you want to scale your wealth and truly concentrate your capital.
So here is our roadmap for the explainer today. First, selling the honest company. Second, building the AI fortress. Third, the trap of diversification. Fourth, eliminating cognitive load. Fifth, overcoming the endowment effect. And finally, number 6, aligning action with identity.
All right, let's jump right into section 1, selling the honest company. Phase 1 is all about liquidation.
Now, like I said, we aren't hiding behind percentages or vague statements here. These are the literal receipts. If you look closely at the execution source data, you can actually see the trades being routed through Arca, dark pools, and interactive brokers. And look, I get it. It takes some serious conviction to hit that sell button across multiple lots just to clear out an entire position. But doing this is the very first physical step in a major mindset shift.
Let's quickly break down the math. Across these 4 distinct market day execution orders, a total of 1,565.5931 shares were sold. We've got batches of 500, 200, 300, and then that final lot of roughly 565 shares. The execution prices stayed really tight, right between $3.77 and $3.82. Ultimately, this specific move generated a solid $5,943.16 in freshly freed proceeds, netting a realized gain of $375.77. But listen, the crucial takeaway here isn't about chasing some massive windfall on this one specific trade. Not at all. It's about ruthlessly unlocking almost $6,000 of dormant capital so it can actually be put to work in much higher conviction plays. Okay, let's dive into this next part. Section 2, building the AI fortress. Time to deploy that free capital.
Because you see, the action absolutely has to match the strategy. Right after freeing up those funds, a total of $2,433.74 was immediately and systematically reinvested into our core AI and crypto positions. The source receipts here show 2 shares of Meta Platforms routed through the Interactive Brokers ATS at $619.87. So that's roughly a $1,239 investment. And then right below that, 100 shares of BSOL, which is the Bitwise Solana ETF, were scooped up and routed through BATS at $11.94. That injected another $1,194 right into the crypto thesis. The main point? The cash didn't just sit around gathering dust, it was instantly deployed to build up the fortress.
Think of it like this. Selling HNST represents cutting your ties with the past. It's a conscious decision to step away from passive, peripheral asset accumulation. On the flip side, buying Meta and BSOL, that represents buying into the future. It's a calculated, aggressive leap into high-conviction investing, where you are only betting your hard-earned money on the massive macro trends that are literally reshaping the world.
But as we transition to the next part of this explainer, I really want you to understand something vital. Moving capital from column A to column B, well, that's just math. The math is easy. The real challenge is the mindset. Getting rid of the clutter in your portfolio is actually a profound masterclass in investment psychology. So for the rest of this explainer, we're going to unpack the 4 psychological pillars of high-conviction investing that actually make trades like this possible in the first place.
Which brings us to section 3. The trap of diworsification, or as I like to call it, escaping the FOMO.
Okay, so you've definitely heard of diversification, right? But diworsification is a seriously dangerous psychological trap. It is the bad habit of buying random stocks just to feel a false sense of safety, or maybe just because you kind of liked a specific product 5 years ago. And what happens when you do that? You completely dilute your potential returns and you spread your capital way too thin. By cutting ties with these peripheral companies, you're actively rejecting the fear of missing out on other sectors. You are basically making the choice to stop watering the weeds in your garden.
And look, this isn't just some crazy theory we cooked up on the channel. Warren Buffett literally says, diversification is protection against ignorance. It makes little sense if you know what you are doing. This quote perfectly anchors the strategy we're looking at today. It completely validates the choice to concentrate your wealth and bet heavily only on the technological shifts like AI and blockchain that you deeply understand and have absolute unshakable conviction in.
Moving right along to Section 4, eliminating cognitive load. Let's talk about the mental cost of clutter.
People don't often talk about the hidden mental cost of having a super cluttered portfolio, but trust me, it is massive. Every single stock you own demands a slice of your mental bandwidth. You have to track the earnings calls, you have to monitor the broader sector news, you have to constantly evaluate if that stock is actually still worth holding. By trimming the fat and dumping the non-essentials, you free up immense cognitive energy. And that energy allows you to focus sharply without any distraction on those core 8 tech stocks and your key crypto kingpins.
I absolutely love this quote from the legendary Peter Lynch, and it hits the nail right on the head here. Owning stocks is like having children. Don't get involved with more than you can handle. I mean, think about it. If your attention is fractured across 40 different obscure holdings, there's no way you can adequately monitor the real macro trends that actually matter. Narrowing your focus gives you the breathing room and the clarity you need to manage your children effectively.
Which leads us perfectly into Section 5, overcoming the endowment effect, adopting ruthless capital allocation.
So a huge part of this is understanding our own human bias. The endowment effect is basically our natural psychological tendency to overvalue things simply because they happen to belong to us. It's the exact reason why we hold on to a perfectly fine stock that hasn't done a single thing for our portfolio in years. Overcoming this bias means you have to start treating your portfolio as a ruthless, highly efficient capital allocation machine rather than a shelf full of sentimental souvenirs. Taking that newly freed capital from HNST and immediately deploying it into Meta and Solana? That shows tremendous emotional discipline. It means you're finally looking at your portfolio objectively. You are stating, through your direct actions, that you value massive future upside way more than you value your past attachments. You are flat out refusing to let emotional bias dictate your financial future.
And finally, Section 6, aligning action with identity, finding true clarity of purpose.
2032. If you follow the Noob Selling Options channel, you know exactly what this number represents. This is the ultimate milestone. This is the destination we're all driving towards. And the cold hard reality is this. If your overarching thesis is that AI and crypto are the generational wealth drivers that will get you to 2032, then every single dollar sitting in a non-aligned asset is a direct contradiction to your very own goals.
Consolidating a portfolio like this is ultimately about making your actions actually mirror your beliefs. It gives you absolute clarity of purpose. By actively betting on AI and crypto and clearing out the irrelevant weeds, you build the psychological fortitude required to hold your ground when these high-conviction plays inevitably go through periods of volatility. You are completely harmonizing your financial reality with the narrative you're building. The fortress can only stand tall when you clear the brush around it.
To really summarize the entire philosophy of this major portfolio transformation, we can look to the late, great Charlie Munger. He said, "The wise ones bet heavily when the world offers them that opportunity. They bet big when they have the odds, and the rest of the time, they don't. It's just that simple." That is exactly what we are witnessing here with the liquidation of those peripheral assets to heavily fund the AI and crypto fortress.
So, I want to leave you with this provocative question to ask yourself the next time you open up your own brokerage app. Does your current portfolio truly reflect your ultimate financial goals? Or are you just holding on to souvenirs? If you want to continue learning how to ruthlessly allocate capital, overcome these sneaky psychological barriers, and build true generational wealth by 2032, make sure to hit that like button and subscribe to the Noob Selling Options channel. We are building this fortress together, step by step. Thanks for learning with me today, and I will see you in the next explainer.